This conference will now be recorded.
Good evening, ladies and gentlemen. It's Clueless Aid Trading Frank. It's 9:02 p.m. on November 9th, 2020. Welcome. This is actually the weekend strategic session that was delayed by a day. So it's Monday. We had a monumental, historically probably one of the largest market open ever. 1,000 like whatever point on the Dow Jones futures, and God knows what on the Nasdaq and the Russell 2000. Unbelievable. Many of our traders had some of their best days ever. Congratulations to some of them. And most importantly, it's called behavioral game theory. You know, one of the pillars of Clueless Aid trading. Look, we had one of the biggest market opens ever. Yes, the market pulled back. I showed it on the chart and it's right there. I drew these lines before it happened. But guess what? Nobody, majority didn't make anything. And that's the reason there is no excitement. That's why we have only great members like Chris and Paul in attendance. We should have everybody in attendance. Everybody in attendance. The 160, well, whatever, I don't even keep account of our traders in attendance. But no, that is called behavioral game theory. That means the fear and the terror, which works both ways. The fear and the terror when markets go down, and the fear and the terror when markets go higher. By the way, full disclosure, this is purely for financial education and not for any solicitation or advice. Have to say that, legal terms. So the fear and terror of a massive bull market hitting new highs today. It hit new highs exactly as I put out on my webinar, on my last one. I showed both the bearish and the bullish picture. And the bullish picture worked out so fast, so quick, it's mind-boggling. So the fear and the terror works both ways in bull markets and bear markets. And that's the reason why 90, I would say not 90, 99% of retail emotional traders have not made money, despite the fact we had gap opens of more than 500% on stocks like United Airlines and so many others. And so many others. Apple, which was down by 1.5% end of the day, gapped open $5, $4 at the open. Cha-ching! Like I said, limited trading today. It's all on my real-time Twitter feed. Sell at the huge gap open and sit back. And people who followed that suggestion did extremely well. Extremely well. And that's the way the markets are going to be going forward. No question about it. Another point that I want to make, which all of you, and as I'm talking, I'll switch around the charts. Another point that I want to make is that the machines are getting faster and faster. And who are the machines? The machines are algorithmic high-frequency trading black box trading computers run by hedge funds and some institutional firms, mostly by hedge funds, which are moving at warp speed. Warp speed. And not just today. It's been happening for weeks now. And I've been enlightening you all and notifying you all like this is the way it's going to be. They're day trading like monsters. And their day trading speed is so much faster than ours, it's not even funny. So all I gotta say is, like I've been saying for weeks now, when you have a big gap open or a big gap down, that's when you look to buy. A big gap open, you sell. You don't wait around and say, oh, the market is a gap and go and it's going to keep on going higher. No, it doesn't work like that. And that's exactly what happened today. And most importantly, for everybody who's going to be listening to this webinar, and I'm a straight shooter. I just talk directly out of my heart. There's no script in front of me. There's like nothing that I'm reading off on. Okay. I am telling you exactly what I do. And I'm not always right. Overall, I'm right, but I'm not always right. Volatility will make us humble. So I'd rather be humble and right most of the times than have hubris and be proud and be wrong most of the times. Right? Exactly. I'd rather be humble and right most of the times. And that's pretty much my philosophy. So the bottom line is these machines are just nuts. I see the movements in stocks in the first 15, 20, 35 minutes. There is no linearity. There is no, okay, straight up, okay, I'm up, we're going higher. No. Boom, they'll come in. And that's the reason these tactical charts are so critically important. I can't even tell you. A long time ago, when I had 8,000 members on StockTwits, now I have what, like almost 32,000? I don't even post it that much. You know, I've been saying that for a while because I don't have time. They said, please start a trading service. I don't want to start a trading service. I love trading my own money with no responsibility. Well, I have no responsibility for you guys anyway, but no concern or headache about what I'm putting across. And what was the chain of thought? I kind of lost it for a minute. So the bottom line is like that. When it comes to here's what I want to say. I told myself, you know, and remember, you always talk to yourself when you're alone, right? Having a drink. I said, I gotta start believing in my own bullshit. My things are like so dead right, it's not even funny. It is not funny. If you look at my charts and see them, what these multi-trillion-dollar U.S. financial markets, the greatest markets in the world, the deepest liquidity in the world, that's United States markets, by the way. Okay, the levels they hit my chart levels like 2 levels, like which boggles my mind. Now we are human, so we can react as exactly to that point. But like I always said, make hay while the sun shines, and get the meat in the middle. If a SPY call goes from $1 to $5, well, get the $3 in the middle or $2 in the middle. You don't have to get the 4. You can, because the machines are way too fast. So, saying all that, monumental day, great week, great winners, and congratulations to all of you who set up the swing trades, did very well. Huge sector rotation from techs, which I think is going to be a 1 to 3 day thing, if you ask me, because technology stocks were used at ATM machines. Look at Nvidia, was down, then went green, and then ended down 33. You think that's normal? I mean, come on. So the bottom line is that's what machines do. And they will fry your mind if you don't focus on these great clueless A trading tactical charts. It is a fact you cannot deny. And the more you look at these charts, the better off you will be to minimize your losses and maximize your gains. That's all I got to say. I want to keep this webinar short and straight to the point. So let's start off with one of our iconic weekly charts that was drawn months ago. In fact, it was drawn years ago, since 2018, the Christmas Eve massacre, December, right there. So nobody can say, oh, you kind of manipulate your charts to fit the market. No, I don't. I just adjust them to show you what my tactical forecasts are. And I've been overall so dead right, it is almost really scary. And Halloween's passed, so it's like past Halloween scary. Okay, so now we're going to look at the COVID crash. That's our reference point. That's your trend line. Okay, just adjusted it while I was speaking to you guys, talking to you guys. So we have the MACD here, which is really telling us nothing other than the fact that it's still very strong, which means the bull market is alive and kicking. We have a undetermined precedent because officially, sorry, I don't care what political stripes anyone is. I really don't care. I'm just a true American patriot, all right? Is we don't have an actual American president. And there's going to be a lot of turbulence over the next couple of days, over the next couple of weeks, going into going into December. And hopefully it's determined whether or not who the president is. Because the actual votes have been counted, but there are legal ramifications on votes. And some states haven't even officially announced, like, 4 or 5 of them. So let's see. And you don't think the markets are going to react to that? Of course they will. So let's keep politics aside and let's look at these precision predictive charts, because that's one of the biggest things that Plutus trade. Predictive. You can't trade what you see because the machines will blind you because they're so fast. Those were the old days. Trade what you see. You hear that from a lot of trading services, a lot of great trading gurus. Trade what you see. Trade what that you see. By the time you see it, you're so blinded, you don't even know what the heck to do. You have to be somewhat predictive, and that's what we do. So what's going on here? We do have a inverted hammer. Still green. The body of the hammer is green. That means money still stayed there, despite the fact that we were up like 1,400 points on the Dow Jones, and we only ended up 834 points. Now, this is the bigger picture, which is the weekly picture. So net, I say we are okay till we break below 3478 right there on the E-minis. And if we come somewhere around here, which was the big ascending triangle breakout, which I've been talking about for a while. Let's get this thing going. 1 second. There. So here's your ascending triangle, which broke out last week. There we go. Right there. So now we have an inverted hammer. It is not blood red, which is good. And we can retest 3,500 easy. So that means another 400 points in the Dow, easy. Now, one of the things that all of you have to do, not just Chris and Paul who are in attendance, and thank you guys for being here, is review my past webinar where I went back and forth with my friend Chris. Okay? And the bearish and the bullish scenario. Well, guess what happened? The bullish scenario already happened so fast. My head split. I'm like, wow, look at this crap. Wow, this is great. Well, this is great means it's time to sell for that time. By the time you feel really good, it's the time to sell. When you feel really crappy, like you did when the markets did this 2 weeks ago, was the time to buy. And I said that. It's actually quite simple. The KISS principle, keep it simple, stupid. This was the time to buy because the channels were intact, and I'm just showing you one chart. I showed you many. I showed you the VIX. I showed you the SPX E-mini 1 hour, the daily. So much, so many. This was the point of maximum fear, just the way it was back in September. And this bullish engulfing candle came through, and it's still bullish engulfing till we lose 3,400. That's a long way down. 3,400 is like 1,000, 1,500 points down. Exactly. So I'm not even going there. I'm going to see how the market reacts. Remember, the market reaction is far more important than what the political news is, economic news is, or whatever. And the market reaction at around the 3,500, 3,480 level is very, very critical. So let's see. Now, let's look at the internals. Let's keep it simple, right? Using the KISS principle. Keep it simple, stupid. That's what I keep on telling myself. Are we going to break up over 80 RSI on the stochastics? Or are we going to buckle down? We start buckling down, we are going to hit 3,400 very easily. That's 150 points from here, 150 times taking the higher factorial on the Dow is 1,200 points. Just to come from here, minus 1,200. And believe me, it can happen without breaking the technical uptrend. Okay, that's all I got to say. Let's move on. Let's look at a very long-term chart that I've drawn and I haven't actually shown in a couple of weeks. And that is this. It's a multi-year chart from the Obama days, President Obama days, from the existential crisis in the US and global markets, which was 2009. Markets turned on March 9, 2009. As I like to remind people, I was still on Wall Street, still trying to fend off institutional and very high net worth retail clients from completely capitulating. I try to help you guys, but I don't, you're not my clients. You're just members, hopefully trying to make some money off my, precision suggestions. And a lot of them buckled. And this is what happened. We hit 666 on the S&P 500. I remember, around there, give or take, the devil's number. And this is through the whole Obama administration and Trump and everything. And guess what this chart is? It hit exactly where I said it was going to hit, right there. So normal intelligence, common sense tells me, take it easy. We just hit the upper end of that multi-year, decade-long channel. It's 11 years since the climactic bottom. Lots of mini corrections, not many, they were big. For many different reasons, Brexit, like you name it. Federal Reserve taper tantrums, you name it. They all tried to say, all the naysayers, all the bears said, no, you can't touch this market. It's over. It's over. It's over. The Trump election in 2016, it's over. Well, it wasn't over, but we are hitting the upper end of the channel. Now, to break out of this and hit that 3,800, 4,000 S&P mark will require some real powerful breadth thrust. Not bread, like breath. BREADTH. Some real catalyst, like an infrastructure program from the government, whoever is going to be nominated president. Okay? Will require a Pfizer vaccine, which was announced 90% effective, which was part of the reason the markets went ballistic. That's part of the reasons why we made so much money in United Airlines, just to name one stock. And Boeing, just to name another stock that I've been telling people to buy. Well, 90% effective is all fine and good, but we have to take the vaccine. And many people will say, no, I'm not taking the vaccine. Fine, what am I going to say? I mean, what do I care? I'm not a doctor. My parents were great doctors. God bless their soul. Okay? So it hasn't been implemented yet. It's just a study which says it's 90% effective. And BNTX, one of our long-term swing positions that I've been asking people to buy, haven't really suggested it lately, I know that, was up huge. From 80 bucks, 90 bucks, it went up to 100. That's BNTX. That's the catalyst within Pfizer. That's a European company that's actually developing the vaccine. Went to $115. 92 yesterday, 115. Big frigging move. Pfizer's not the one creating the vaccine. It's BioNTech creating the vaccine. And you know, I've been talking about BioNTech here and there for months now, and we have done well on it. And full disclosure, I didn't have it on Friday. But no one even knows about BioNTech, and I've been talking to people about it. I've been talking to my members about it. Anyway, so bottom line is we hit the upper end of the channel. So we will need an implementation actual on the ground. Vaccine injections in order to create a massive movement. In the meantime, if COVID-19 cases start to come down, hospitalizations start to come down, that's great. That's what we want. But we can't just sit there like an ostrich with a head in the ground and say, no, there's no COVID-19. Who gives a crap? Mark Meadows just got COVID-19. I was stopped by to say hello to a friend of mine, old Irish guy, not that old, owns a whole bunch of bars in Jersey City. So I just stopped by to say hi to him last weekend. He goes, Frank, you won't believe what happened. And his face was like, his 45-year-old son died of COVID-19. And here's a guy who's a hardcore Trump supporter. And his 45-year-old son died of COVID-19. I'm like, holy shit. Owns a whole bunch of bars, he's a rich guy. So when people tell us like, oh, it really doesn't matter, whatever, I guess it does matter when it hits close to home. Exactly. Okay? All right. So that's where we are. These lines were drawn. You can listen to my old videos like blah, blah, blah. And so right there, we hit. And guess what happened? The sell program came in. Kiss my clueless A trading charts. Anybody who tells me, Frank, you have no idea what you're doing. No, I don't. But because maybe I'm humble enough not to know what I'm doing, maybe that's why I do so accurately, so precisely that no other service out there, no other guru out there can put out these kind of charts. And it's a fact. And I'll stand by it. Okay? So we are very, very overbought right now. So we're going to go through a period of turbulence. And it doesn't matter if the futures are up 20 points or 30 points or this and that. We are very, very overbought. And one of the last things we'll look at tonight as we wrap up this webinar is the VIX, which I've been read right on. And please review the past webinar and the one before that for detailed VIX analysis on where I thought it was going to go and where it did go. And it still has room to move a little bit lower. That means we still have a little bit of room to move higher. Maybe retest what we were at 9 a.m. this morning. Okay, let's move on. So we saw this, we saw this, we saw this. No, we haven't seen this. Okay, so what happened here? This is the chart that we have been looking at. And remember, when it comes to technical analysis and charts, you have to use reference points like, because big things are happening, right? Markets are up 1,000, markets are down 2,000. So you have to look at reference points on the short term, the intermediate term, the longer term. Longer term charts will tell you, like, whether we are going to pause a bit. The shorter term charts will help you with your trading. So this is a short term chart, right? Of course it is. Not the first time you've seen it, the 1 hour chart. So what happened? We almost got to where I had drawn the uptrend line, which is 36.89. We went up to 36.68. Good enough. I still get an A plus. And boom, the sell programs came in. And I told you guys, sell at the open and sit back and chill and buy a few things. I did a couple of re-entries, but don't go nuts. So what happened here? We had this massive breakout, like monumental, one for the history books. The massive inverse head and shoulder that I've been talking about for weeks. I never thought that today was going to happen that quickly. I thought end of November. This is November 9th, for God's sake. I even said that on the last stick. November 9th, that by the end of November, we should be looking at 3,600. We blew up to 3,670 almost on the E-minis. So now we are going to fight here to retest this breakout. So don't sit there like comfortably and say, oh yeah, that breakout retest of the neckline, because that's a neckline, will definitely hold. No, it might not definitely hold. We might slip and slide all the way down here. And I showed you on the other chart a few minutes ago, down to 3,500 and break all the way down to the previous neckline, which is 3,500. That's 400 points from here to here, minus 400 on the Dow. And believe me, that's going to impact every single stock that you have, almost, aside from some selective ones. Okay? And we might break all the way down, believe it or not, in extreme case scenario. When we were down here, I said, buy, buy, buy. We are going to get up to the Fib 50. And we did. And there was a lot of jostling. Back and forth, back and forth, back and forth. Boom. That's what happens at major inflection points in the market. Look, I am not the smartest technical guy. There are technical gurus out there in StockTwits and many other trading services. They will show you charts that I can't even like figure out what the heck they're saying, because they're rocket scientists. Well, guess what? Rocket scientists don't make the best traders. So I like to keep it simple. Fib 50 was gone. Extreme case scenario, we will crash down back to the Fib 50 to retest that, which in my opinion will be a great buying opportunity. And that's a long way down, 3,500 to 3,371. Let me tell you, ladies and gentlemen, which I've been right on so many times, is 130 points on the S&P E-mini handles times 8 is 1,000. Remember, I don't erase my videos, right? So it's all there. So somebody can say, hey man, you sold that wrong. Okay, good. How about the 90, 80% of the time or 70% of the time I'm dead right? 1,032 points to retest the Fib 50. That is a strong possibility. And it's going to happen very quickly. How quickly? One day. You don't think we can be down 1,000 points one day? Absolutely. How many times have we seen that? So please, this is your short-term chart, but I'm just showing it to you. Let's pull in the VIX. If I can, because my other screen is kind of frozen. So I might have to, well, actually I did post the VIX here to help all my members. Right there, right there. Let's get the VIX going. Ladies and gentlemen, majority of you have been trained in your own head by great trading gurus, I guess, but they're legacy trading gurus. They're like the IBMs of the world, not the NVIDIAs of the world, which are the next generation heroes. They've told you it's all about price and volume. Bullshit! Exactly. BS. Price and volume? Price and volume were fine and the privy of great technical traders years ago. but the machines are control price and volume. And if you do not understand the externals and the internals, price and volume means nothing. Nothing. You think a volume goes into a stock and that's it, it's the best thing ever. Yeah, it's good, but it's not going to make you money because that volume can dry up so fast and the algos will come and decimate you right there and then, right when you see the volume spiking. But they are important, but they are not the final determinant. I hope you guys are understanding the English I'm speaking. Exactly. So what is this telling us right now? Because I've been dead right on this, and you all know that. Okay? The lower Bollinger is 21. If we're going to quibble about, oh, are we going to go to 21, whatever, right now is a very pronounced. Let me just change the color. Hammer reversal. Just the way we do it with stocks, we do it with the volatility index too, because that's the canary in the coal mine. This is a very pronounced move. And the fast stochastics, which means over the next couple of days, is about to turn. And when this fast stochastics goes up here, the VIX is going to hit 30 and the markets will be down 600 points easy, just the way I explained to you on the other side. They are all correlated. They are all correlated asset classes. I'm trying to think of the term, the quant funds, but there's another term for it. It's going to come to me in a second. The ones which basically just trade E-mini futures or NASDAQ futures. The proprietary firms which do that. They have their machines correlated between the VIX and the broader market. That's the reason why it carries so much weight. That's your short term. We are going to lose some, in my opinion, short term. I'm not saying tomorrow or whatever, maybe in the next couple of days. Okay? Because we have a day count going on too. Remember, the first 5 to 8 trading days of a new month is when the pension fund and the institutional money comes in, right? Exactly right. So there will be a support under the thing. But then as we get towards the middle of the month, down. Whichever the case, the short-term VIX is very oversold, about to turn. The longer-term VIX, which is the S stock, the slow stochastics, are still pointing down. Still pointing down. We still are not starting to see this type of turn. When you start to see that, and when I show it to you, you all better be reducing your long positions or putting out some nice shorts on whatever way you want to do it, whether it's SPY puts, which I use most often, or QQQ puts, whatever. But we are not seeing that yet. But we do see a very sharp long tail hammer reversal today. Markets were up 834 points. Can somebody tell me what the VIX did today? Please. Because I need you guys to train your eyes to look at that stuff. What did the VIX do today? The VIX. And the markets were up 834 points on the Dow Jones Industrial Average. What did the VIX do?
It dropped like a rock.
Bullshit. Do you have a screen in front of you? Why don't you look up the VIX and tell me, Chris, what the VIX did today at the close of the day?
Oh, at the close of the day, at the beginning of the day, it was dropping. At the end of the day, it spiked big time.
We're talking end of the day. That's why I'm talking about the reversal hammer. Focus. What did the VIX do at the end of the day? It was up while the markets were up 834 points on the Dow Jones Industrial Average. Isn't that a negative divergence for the markets? Why would the VIX be up with the markets up 800 points? Exactly. Start thinking like a robot, not like a human. We're talking about how the VIX ended the day. And it dropped exactly as I told you guys that it would drop. And please validate my statements by looking at my previous videos and my previous Twitter feed. Good. Now, let's take a look at the VIX on, let's close this out. Let's take a look at the VIX on, I can't even get that other screen in. And this is quite dangerous. I'm going to have to change screens right now. It'll probably take about 3 seconds. 1 second, ladies and gentlemen. I think I got it. You guys should have it. And let me know when it shows up on your screen, please. I'm moving on to one of my other screens. Okay, you have it, right? All right. This is your VIX. This is the ultimate risk management tool you'll ever use. So please get in bed with the VIX. Get in bed with the VIX. Of course, selective stocks will do certain things. That's a different story. I'm talking the broader market. And if you have a large portfolio, you better be watching the VIX. So what did the VIX do? Let's move this line. Actually, let's not move this line. Move it up. This is your VIX weekly. One second. Line border. I just got to change the color so everyone's a little bit more focused. As I'm doing this, remember, listen to my Twitter broadcast that I've been doing more often during the day. Not because I like listening to my stupid voice, because I'm trying to help you guys. All right? Seriously. So listen to it. And one of the things, remember, everyone has their own style of trading, their own way of looking at things. That's fine. I'm just suggesting a certain way of looking at the market in a very robotic, like living in the matrix, right? And I think it served me well. Mind style. Okay, done. So look what the VIX did here. Let's get the drawing tool, if I can. Bingo. What did the VIX do here back in August, September? Hit this upper end of this gap, which is 2190, which is pretty much where we hit today, and went boom, back towards 40. In fact, hit 45, but mostly around 40 to 41. Same thing happened back in the May-June period. The fast stochastics, which is what's telling us what's going to happen, which the near-term picture is starting to turn. Remember, Pluralist trading is not some idiotic, bullish, buy every frigging BTFD kind of service. We like to look at things in a very tactical way, in a very mechanical way. I am long-term bullish, of course, even though my long-term channel, which I showed you a few minutes ago, just hit the upper end of the scale. So unless something really dramatic happens, it's going to be a tough ride getting up to 3,700, 3,800. It can happen. Of course, I'd like it to happen. And I'm not talking about individual stocks. I'm talking just a broader market. So just keep that in mind. We're not stupid bulls here. We're smart bulls and tactical bears at times. So at this point, this is telling us that it wants to bounce. That means the VIX can very easily bounce up 5, 6, 7 points. That means the market very easily can drop 400 to 600 to 700 points. Now, if you want to go nuts, hog wild, and buy SPY puts, trust me, the reason why that probably won't work if you get too friendly with shorting the market is because even now, $5 trillion plus is sitting on the sidelines. And the 10-year government bond, which I'll talk about, on my next webinar on Wednesday, was up 17%, the yield, to 9.58, which is 0.958. In fact, we are going to break the barrier on the 1% level on the 10-year government bond deal. What does that mean? Can somebody tell me what the 1% yield, why the banks went nuts, why MasterCard was up 30 points, why BlackRock was up 5, why JP Morgan was up 13, why Goldman Sachs was up 12, why Bank of America was up $3.30. I was actually going to buy it. Like, oh my God. Remember we used to trade the Bank of America lottos? So can somebody tell me why the yield going higher is so great for the overall market and financial institutions?
They can charge more.
Okay, somebody else? Paul, Chris, do you understand the impact of the 10-year government bond deal almost going above 1%, given the fact we were almost at a 0.5% just a few months ago? What does a higher bond deal mean? 10-year government bond deal mean? Our overall bond deals mean? What does it mean? If you don't know, say, I don't know. Because like I say, we don't have all night here.
I'm not sure, Frank. I thought the financials went up because the thought was that COVID-19 is going to reduce
No. The financials go up is a direct mathematical correlation with the 10-year government bond deal. A 10-year government bond deal going higher means are the prices of the government, the govies as they call it, or the treasuries, are they going higher or lower? If a bond yield is going higher, are bond prices going higher or lower? This you guys have to understand. This is the ABCD of trading, of financial markets. If bond deals are going higher, they went up 17% today. They were up, if it was a stock, they went up, they were at 9.58. We'll move the decimals over. It basically means 0.958. They were up, 380 basis points, or 1.38, whatever. No, it was like 13 basis points, whatever. What does it mean? Come on, you guys are smart. Well, even if you give me a wrong answer, I don't care, because I'm going to give you the answer anyway. Chris, say something.
Nobody wants to get yelled at, Frank.
Huh?
Who wants to get yelled at?
What? I can't hear you.
I said nobody wants to get yelled at.
I don't care if I yell or not. I make people money. Fact is, do you know the answer? Yes or no? Just say, no, I don't know the answer.
Well, if yields go up, people are going to buy bonds.
I asked you a question. When bond yields go higher, do bond prices go higher or lower? Okay,
I don't know.
I don't have all night, okay? Just shows the state of American education, all right?
Lower.
Yelled at, exactly. Shut up. Listen to me, okay? When bond deal, I mean, this is so simple. When bond yields go higher, that means bond prices are going lower. If a stock price is going lower, is money coming in or out of the stock? That you guys can answer. If a bond price is going lower, is money going in or out of that asset class?
It's going out.
Thank you very much. Exactly. So it's a good news that money's coming out of fixed income, the safe haven, and coming into the market. And banks, like my good friend Mike here said, they make more money when bond yields are higher. And we're going to break 1% very soon. That's a very positive aspect of one particular sector in the market, which is the financial sector. And that's the reason why they were up so much. And I'm going to be certainly taking a very good look at it very soon. Goldman Sachs, $12. Wow. BAC calls were up 380%. And as an idiot, I was looking at it, I didn't get into it. But yes, bond yields and bond prices are inversely correlated. That means when bond prices go higher, yields fall. Now, can somebody tell me if yields fall when the yields were down at 0.5% just a few months ago, or 0.6%, is that good or bad for the US economy? Overall. What is that trying to tell you? Well, I'll give the answer because I have all night to wait for an answer here. Okay, is when bond yields are that low, that means we are going into a recession. When bond yields start to go higher, that means there is some form of inflation. Now, why is a little bit of inflation good? Why is the Federal Reserve's mandate, Colin Powell, who's a great Federal Reserve governor, why does he want inflation to be a little bit higher? Can somebody explain that to me in simple terms? Why is a little bit of inflation good for the US economy? Okay, guess none of you know the answer. State of American education. No wonder the foreigners beat the crap out of it and they have $500,000 jobs and we're sitting here like shooting guns in the air, all right? Exactly. So the reason inflation is good, it means that companies, US corporations have pricing power. And when US corporations have pricing power, that means they're making more money because they can charge a little bit more and their earnings are better. You guys understand that part?
Yep.
Exactly. Very simple. Exactly. So the Fed's mandate is to get inflation a little bit higher. We do not want to be sitting below 1% at 0.6%, 0.5% on fixed income on the 10-year government bond deal, which is directly tied in with all our regular rates, mortgage rates, credit card rates, car loans. They actually go off the 10-year government bond deal. So it's a great thing that money's coming out of the bond market, number one, entering the stock market to a certain degree, okay, and that the US economy is starting to inflate. Because as the US economy starts to inflate, that means our GDP. You guys do know what the GDP is, right?
Yep. Gross
No.
domestic product.
Thank you very much. Okay, the gross domestic product is going to be higher. So we want that to happen. Let's go back to the VIX. Here's the interesting part. The VIX has been like when I told you, like, this was the level and then this huge bearish engulfing candle. This was my uptrend line. This was my uptrend line. Guess what happened? It hit that exact gap and it's bouncing now with a small hammer. If this hammer keeps on expanding, like I said, we're going to pull back. No question about it. But in the meantime, this is the thing that bothers me. And I've said this before too. That despite the VIX doing this multiple WWW, type of pattern, right? And we broke out of a W pattern on the S&P 500. You know that. I showed that before. The slow stochastics keep on climbing higher. What we do need to see for a prolonged market move, up another 1,000 points, up towards, we almost hit 30,000 today. Did you guys ever realize that? That we hit almost 30,000 on the Dow? Or were you guys like kind of sleeping? We hit 29,933.33. That's 30,000 on the Dow. No wonder some of our tactical members just had their best freaking day of their lifetime. And some of them said, please don't post my thing. I said, okay, I won't. One of our bigger traders who never, I've mentioned this before, who never really, a couple of our bigger traders who've been with me for a long time, and they're very smart people on their own, made very large six figures because they had very large positions on certain swing setups. And they couldn't believe what happened today. Neither could I in the morning. But they only did that, like I said on my Twitter broadcast, because they had the fortitude, the strength to build those positions at times that many of you didn't even want to touch the market. Okay, so this is what bothers me. It is still moving higher. We would like the slow stows to crash down. If that happens, we're going to hit 31,000 on the Dow. However, if it keeps on moving higher, then these minor fluctuations back and forth means that the market will eventually take another big, massive effing dip. So I'm watching the weekly on the, from a long-term perspective. I'm watching the hourly, which is your short-term perspective. Look at the hourly. This is actually kind of bullish. Can somebody tell me why this is bullish? I want you guys to learn, man, and that's it. I mean, I'm no genius, but this shit works, all right? So can somebody step up and tell me why this is kind of bullish?
Bullish for stocks, you're saying?
Yeah, bullish for stocks, exactly. Why is
There's
this chart? Go
there's
ahead.
a lower high and lower lows.
Nah. That's not the answer. Somebody we can try. You do. At least you're trying. Chris, I want you to understand this thing, okay? So this way, you'll have literally no doubt what the markets are doing, overall. Why is this kind of bullish? This is a 1 hour chart. This is what happens every single day. Going back to the 22nd of
That's very bullish. I mean, you're at the bottom of the Bollinger Band. You've got like those three advancing soldiers there, three white soldiers.
No. You're mixing up the whole picture. My question, okay? My question is, why is it bullish for the stock market? Is the VIX inversely or positively correlated with the stock market?
Well, it's inversely.
Exactly. So when the VIX goes higher, stock markets go lower, correct?
Yeah, when the VIX is, so you're talking about bullish in the VIX, right?
I said I explained it. I've said it 3 times now, so I'll say it again. Why is it bullish for the markets looking at this chart? See, you guys are really like.
The stochastics are pretty high.
There you go. There you go, Crystal. A+, baby. There you go, baby. Exactly. The stochastics are moving very quickly. So that pullback that we saw today on a short-term basis, on a one-day basis, look at the stochastic. You just nailed it. You just nailed it, brother. Okay? That's the answer I was looking for. So basically the stochastics, and let me just pull this out, what Chris just said. The stochastics are getting overbought, correct? The stochastics, that's what you saw when you looked at the internals, correct?
Exactly.
Thank you very much. And we have a downward sloping Bollinger. Yes, we have upper levels here, gap fills and all that crap. But the stochastics, once it gets up here, what happens? Just the way it happens with stocks, except when it happens with the VIX, the stock market goes the other way. It resets. So we are almost there on the S stock, which has far more weighting than the F stock, which is the fast stochastics. The fast stochastics already overbought. What would be bad, and this is what called the variance, is if it starts to move sideways above 80. Just the way when it's when the market's very strong and it stays above RSI 80, like the bears are like, what the hell? The market like just keeps on wants to go higher. So we have to monitor that. But once the S stocks get up here, there is a 90% probability or 80% probability that it's going to reset. And if it does reset from the upper Bollinger or the pivot line, let's say it shoots up to 28 and then starts to pull back, well, guess what the stock market will do? And that's exactly what you saw, right, Chris?
Yes, sir.
Thank you very much. You just helped so many other people out there understand something this simple and so powerful. And thank you for answering that. Good. Excellent. So I'm going to be watching the short-term VIX. I'm going to be watching the longer-term VIX, which really doesn't really make us any money because it's like telling us what's going to happen like 2 months down the road, 3 months down the road. And as a tactical trader, I'm very vigilant about taking profits and such. Not my problem. What's going to happen 3 months from now? That is telling you a longer term picture that the markets are going to have some issues in the next month or two. This is the daily. We've already explained that, and thanks. So that's fantastic. Thank you, Chris. I appreciate that. All right. So now, what are we doing here? Okay, bear with me. Bear with me. So there's really not much to talk about right now, except looking at the Qs. Futures are down about 19 right now. Boom, and you're seeing that happen right there, right there, right there. And we will open up around 3,500. So do not be shocked to see the futures down 40 points at the open tomorrow, because that is the difference between 35.24 and 35.04 is 20 points. Add 20 to where we are right now, which is 19 points lower on the futures, on the E-minis, that is roughly 40 points. And the media is going to say, here we go. The media sucks on both fronts, all right? Because that simply means we are going to engage, one second, we are going to engage the uptrend line here, right there, right there. And given the fact that tactical traders have sold a serious amount of their profits and have very limited reduced positions going forward, they're fine. A lot of cash on the sidelines. At this point, cash is king, short term. Okay, so this, ladies and gentlemen, is, where is my, one second, drawing tools, pen. One second. And I'm going to ask you guys the question because it's a very simple one. I'm just trying to pick the color, and I'll pick red. How about that? I really hate this app. I need to get another app. I got to do it tomorrow to draw this stuff. I'm sick of playing around with this and wasting people's time. Come on. Why is it not giving me? All right, guess it's not going to give me my okay. Got this little, excuse my French, bastard in here. Where is it? Now it's gone. Okay. So basically, what is this pattern here? Not that they won't give me the pen. I'm going to get the brush. I'm going to get this. This is a very hardcore defined head and shoulders. And we just broke the neckline as we speak. There's another neckline here. And I wouldn't be surprised if we hit 3,500. And if not, we'll check the other neckline, which is at 3466. So get ready for some turbulence. Futures are down 21 right now. Okay.
I'm still looking at the VIX.
I'm sorry. What was that, sir?
You still got the VIX chart up?
Yeah, it's on one of my other screens. Why?
Oh, that's the only one I can see.
Oh, thank you for telling me that. Yeah, I got to change the screens. Oh, my apologies. No wonder I couldn't get the pen. Thanks, Chris. 1 second. Yeah, somebody else should have noticed that. Okay, look at the screen. Yeah, no wonder I was stuck. That's what happens when you have all these multiple screens, right? So screen. Bingo. Thanks, Chris. Appreciate that. Got to be looking at the right things at the right time. Yeah, I was wondering like why I couldn't get the pen. Now I have my drawing tools. So there's always a reason behind things. All right. So this is what is happening right now. It's nothing crazy. I think we will close this gap here at around 35.25. Yeah, we're fine. But you can clearly see here that this is a, this is a head and shoulders, and that's called a reset. And that reset is happening rather quickly. Remember, resets when they happen between overbought and oversold, real simple, ladies and gentlemen. The faster they happen, the better off you are, because there's nothing really wrong out there. Earnings are coming in strong. There was a one day, maybe a 2-day tech reallocation trade. They needed to use them as ATM machines to buy the Boeings, the United Airlines, the retail stocks, the Disneys. Disney was up 14 today, for God's sakes. Mickey just went nuts. Exactly, right? Even one of our little stocks went up, and I didn't realize I still had it till it started flashing alert, P&L, Change Healthcare. Those calls, I told you guys to buy it, on earnings. They went down from 60 cents, 80 cents down to 31, 40. They were up at $1.06 today. I'm like, yes, sold it. I put it out there. Should have bought a lot more. Boeing up 25. Let me ask you guys a question. When Boeing's up $26, well, it was higher than that at one point. Yeah, $26. That was close at the highs. What do you think that money's going to come from to buy Boeing? From Bangladesh, from Putin, from Czechoslovakia, from the Arab sheiks? No, it's going to come from the US markets. So they got to use the techs, the Nvidias, the Apples, the Squares, the AMDs, the Facebooks, the Netflixes, the Amazons, down 152 points, to use them as ATM machines to withdraw cash and do a sector allocation into the reopening trades, which I called United Airlines and of course the cruise lines, which we were not in, the United Rentals, which was a monster winner, up 15 points, the Caterpillars, the Mohawks. So that's what happened today. It's not a long-winded sector allocation because growth is still in technology. There's no question about it. But that's really what happened. So whichever the case, we're going to be watching this. And guys, that's basically it. It's 10:04. I need my beauty sleep. Just don't go hog wild over the next couple of days. Be selective. I'm going to do my best, and everything that I talked about on, from my webinars and stuff, just happened a little bit too quickly. Yeah, go ahead. Go ahead, sir.
Just one quick question. Any thoughts about possible rotation from growth to value, or is that too early to look at that right now?
See, I don't quite understand the value part of it because I'm not really a fund manager, but why should there be a movement from growth to value if we don't have a real high spike in interest rates, if you think about it, right? Yeah. So I think what's happening right now is the fact that, I'm trying to pull up the NIMO. What's happening right now is that Trek is very bifurcated. There'll be the Facebooks doing certain things. The Booking.com, which is Priceline, was up $316 because that's an opening trade. So I'm very bullish on the opening trades. I'm very bullish on the United Airlines and the American Airlines, on Boeing, on Booking.com, which the options are so horrendously expensive, it's not even funny. And Priceline was one of my most favorite stocks. Look at that, a black inverted hammer. Whoa, that's actually not good if you look at it from a technical standpoint. That's the Dow Jones, by the way. Look at that. That's not good. Anyway, doesn't really mean much. It can turn green within a day. So my question is, I would still stick with growth, but I would be very selective on the ones that I'm looking at. I'm still very hot on Apple because they are both growth and value. Apple has a very fat dividend payout. Apple is still a growth company, and it's actually a combination of both. The Facebooks and all that stuff, I don't know. I mean, they're making a lot of money. They're making a lot of money, but there's a lot of political regulation coming in and all that stuff. But like you said, Paul, yourself, that if Biden is officially elected, then just the way it was, this morning, techs are going to go through the roof because he's going to be calmer with the Chinese and all the semi stocks and all your long-term holdings, Paul, I think are going to be just wild, like gone. You know what I'm saying?
Thanks, Mike. Yeah.
Yeah, I think so. Keeping,
Yeah.
like you always say, let's keep politics and business aside. The business community wholeheartedly, the U.S. business community wholeheartedly wants Biden in. They don't want the acrimony going on with the Europeans, with the Chinese. They want some sort of stability. So those stocks will just go nuts. It's in big time. No question about it. All right. President Trump has been
Quick,
great for American politics, but towards
quick
the
question,
latter,
Frank.
1 second, towards the latter end of the administration, they were a little bit nutty, and 3,600, almost 3,000 U.S. corporations, and I'm talking Home Depot, Costco, I'm talking Amazon, and I'm talking like all the big names. I'm talking like both on tech and non-tech and Federal Express and UPS sued the U.S. government for illegal one-sided tariffs, which hurt their business. So obviously they're going to go a lot higher. Yeah, go ahead while I'm setting this chart up. Go ahead.
Yeah, I was a little surprised to see semiconductors take such a beating,
I just
because,
I just explained that 10 minutes ago.
well,
Why they took a beating?
as a sector, I know you're talking about the tech stocks, we're talking about Facebook,
No. I just oh, I see what you're saying. No, it was as a sector, semiconductors took a beating for no other fundamental reason. Nothing fundamentally changed other than the fact that they were used as an ATM machine to take money out to buying the Boeings and United Airlines and all those other companies and the United Rentals. That's the only reason why the semiconductors took a beating.
okay, yeah, I expect those to turn around faster than, like the other, like the
Absolutely,
Amazon.
I expect that too, but also keep in mind, when a stock like Nvidia is down 33 points, there are some significant margin calls from retail pikers like us. Like I said, I didn't know Nvidia right now, but from retail traders and from institutions who have to come up with the money because their positions just went. And I can assure you that somewhere along the line today, some smaller hedge funds blew up. Tech focused hedge funds blew up, except no one's going to talk about it till like a week down the road. Somebody's going to write about it. But I have I'm almost certain, 100%, and I've seen this happen before, that they blew up because they're on margin, right? They're very highly leveraged. You guys understand that part? They're not buying this stuff with cash. They're leveraging it up 6, 7, 8 times. For every 100,000, they're borrowing $700,000. So when days like this happen, they go belly up. Let's try to understand the dynamics of money management. It has nothing to do with technicals. It has nothing to do with fundamentals. It has to do with pure portfolio dynamics. So if you get a margin call worth 20 million bucks, you better sell a lot of stuff to come up with that money, or else you're getting done. And that's pretty much what happened. So these things don't end in one day. Maybe it'll go on for another day or two. But just so you guys understand that, 1 second, I'm trying to get.
That was quite the trap too like Nvidia was a good example of a perfect trap set because it was up about 3 days in a row, about $30 a day, and
Yeah.
everyone was piling in, and then boom.
Yep. Exactly. And remember, I'm just trying to express my thoughts, and I'm a very contrarian thinker, unlike most of you guys. All right, you guys are much smarter than me, but I just think like weird. All right, I know one thing: Hedge funds are day trading this market like I have never seen ever. They're day trading individual stocks like I've never seen ever. I'm serious. It's mind-boggling how fast they're moving. They're scalping 10, 15, 20 points here and there. And of course they are. You buy 10,000 shares, you made 15 points. That's 150 grand on your P&L within minutes. So don't sit around and be naive and say, oh, the fundamentals. Just try to understand that they are completely in control of this market. And that's the reason why things are happening like this. Fundamentally, nothing changed. What happened? Semiconductors all of a sudden went out of business? So please, let's not be naive, okay? Let's start getting smart. All right, let's see here. 1 second. Because I'm always monitoring stock tweets and all these great minds, and they're always very monolithic. They're always very like, this happened, this happened. Like, dude, why don't you think like really out of the box for a minute? And these guys are smart people. Like, you see, I really respect people who think outside the box. And I find very few of them. And that's why the Tom Lees of the world, the Katie Stocktons of the world, who's the finest, prettiest technical analyst ever, a chance to meet her and on some seminars and stuff back in my days on Wall Street. She's so smart. They should bring her in. People like Tony Dwyer, some people like that. I respect that smartness. They really think outside the box. And a couple of other people. The rest of them, they're all the same herd. Same crap over and over again. Oh, this line, yeah, this line, this line. Like, tell me something I don't know. All right. So here we are with our not graphite. We want some color on this pig. All right, here we go. This is your daily. This is your daily. This is the last thing I'm going to show you guys. This is your daily. Still going higher. Shouldn't be in red, actually. People will be like, why is he putting in red? In green. Still going higher. We're hitting 60. Look at this. Still going higher. You see, each of these very powerful technical charts will give you a slightly different picture. So this is more of a directional bias picture. What's going to happen over the next week or so, or the next couple of days, instead of what's going to happen over the next 15 minutes. So the NIMO is telling us this is nice, this is getting overbought, but still nice. And this is certainly telling us we have a little bit more room to go. And that's the reason why Christo identified the 1 hour VIX charts as getting seriously overbought. Yes or no, Chris?
Yes, affirmative.
Exactly. And this is validating that we still have a little bit more room to move towards the middle of the month. Now, here's your weekly, which is giving us a slightly bigger picture. And let's see what the weekly is saying. The weekly is pretty good too. The weekly is basically telling us on the NIMO that, let me get the drawing. It's telling us we have a little bit more room to move to the upper Bollinger. This is certainly looking good. This is certainly looking good. It turned. So net, we're okay. That's all I got to say. Net, we're okay. Intraday volatility, hey, we got to live with it. But at the same time, we have a lot of other political headwinds that are black swan events, which are unquantifiable on technical charts. So we have to deal with that. On that note, thank you so much, Chris. Thank you so much, Mike and Paul. And for the rest of you who are going to be listening to this, thank these three gentlemen for being here today and putting in their input. And I'll see you guys tomorrow. That's it. Let's make it happen. Great day.
Thanks, Frank.